So on a monthly basis, we analyze the mutual fund data, what have they bought, what have they sold with Morningstar, and Kaustubh Belapurkar is back with us, Director of Fund Research with Morningstar. Kaustubh, good morning. Thank you for joining us. Well,
Thanks.
Infosys, the stock is down 15% in the month of August. Your research is indicating that in the month of July, mutual funds really bought aggressively into Infosys. What was the quantum of buying?
So the quantum wasn't very large if you look at the overall holding of Infi, but yes, the trend, if you not just July but through the year, and over the last 1 year, we've seen Infi has actually been, managers have been adding positions. While they've been going underweight technology as a sector, they've cutting positions in other stocks, but Infi has been kind of the favorite stock.
HDFC is bought into it aggressively.
HDFC bought into it aggressively in the last month, but otherwise most managers have added positions over the last 1 year in Infi. If you look at it, or a 50,000 crore investment by funds into the technology sector, 40% is in Infi. So it's a pretty staggering number that's purely into one stock in the tech sector.
And do you sense that all of them are going to sell off in the due course of time?
So to my mind, I don't think there's going to be a knee-jerk reaction right away. They're going to obviously, just wait and watch, because the price action was sudden and swift, and there's not really a way that you can get out right away. You don't want to hurt the investor, so they will take some time to assess really what's the way going forward before they take an action on their portfolios.
Wow. What about the rest of the market as well? Because the last time we chatted, we were around the 10K mark, and ever since then, it's gotten a little wobbly. So have global markets as well. What are the trends that you're picking up? Is this weakness likely to remain? Do you think we're going to again get back to those all-time highs? What's the sense?
So the interesting bit, flows have anything but come off. August is still we yet to see the numbers in terms of domestic investors, but July was extremely strong, close to 20,000 crores in flows that came into equity and balance funds. For the year,
how much was equity, how much was balanced?
Equity is about 12,000 crores, so which is a staggering number.
Are small caps still getting inflows?
To a limited extent, because some of them actually reduced the quantum that you can invest or actually shut flows. But yeah, I think the large proportion is still in large caps or flexi cap funds. But yes, mid cap funds do still get.
Which scheme has got the maximum inflows?
It's actually broad based. You look at your ICICI, Birla, HDFC, SBI, they're all growing assets.
The top five. Yeah.
So 3 schemes which have got the maximum inflows.
I think one that has stood out is SBI Blue Chip.
Okay.
Kotak, has also grown a fair bit of equity assets over the last year or so. And then it's kind of more broad-based, where a lot of ICICI funds, HDFC funds are seeing flows.
What else has been the nature in the last 1 month or so, ever since the market started correcting? We've talked about IT. What else has stood out as a trend sectorally?
Sectorally, I think the one trend that's again continued to go through is, banks, especially private banks, continue to get flows. HDFC, ICICI continue to see, and the financial sector exposure now for domestic funds is about 30.5%, which to my mind has probably been the highest in the recent history, that from what I can remember. Pharma, technology continue to see a reduction in weightage, as we speak, and technology is probably...
Pharma even now?
Pharma even now. So, there's been some marginal cutting, so you wouldn't see aggressive adding or cutting, but, it's because there's so many flows and there's no fresh allocations happening to the sector on an aggregate basis, pharma exposure is coming off.
I just want to look at the data point that currently I'm not surprised with this data, that HDFC Bank has the largest exposure by mutual funds as a stock, 40,000 crore. That's about $7-8 billion of total mutual fund money is only lying into HDFC Bank, and I'm not even accounting for what the foreign flows here are. The interesting bit for me is actually AU Financials. We talked about stretched valuations and rich valuations. AU Financial founder mentioned there. And then Shriram Transport Finance. This is all your data.
Yeah, that's right.
Shriram Transport Finance. We're talking about a deal uncertainty with IDFC, and someone's bought into Shriram Transport. Who has bought into Shriram Transport Finance?
Shriram Transport, a couple of fund houses. That's Reliance and SBI.
Okay.
Reliance has actually added new positions. Okay. SBI did hold to a certain extent, but they've added fresh positions on the counter. That's why you've seen a large jump in the holdings of Shriram Transport across funds.
But we've not seen much change in terms of the selling pattern. Pharma is not getting reflected in terms of the net outflow. The weightage may be getting reduced, but according to your data, the stock where the maximum outflow is visible is actually Bharat Financials.
That's right. That's right. So ICICI has actually pretty much cleaned out Bharat Financial from their portfolios. DSP is also sold to a large extent. and that's why that has come off quite a significant amount. The other one is, the small Oriental Bank of Commerce, where again ICICI has kind of chopped off most of their positions on that stock.
The last time we spoke about, the new emergence within the large cap space, not new, it's old now, but L&T and Reliance Industries, and you talked about as to how flows are extremely skewed towards these two names. In the recent profit taking, have those inflows ebbed off at all, or are they still chasing Reliance and L&T?
So actually Reliance, for the last few months they've been selling, and even if you look at it this month, there is selling, and across fund houses. It's not one fund house selling large blocks, but it's the large 4 or 5 fund houses actually booking profits on Reliance, and that's a trend we've seen over the last 2-3 months. L&T, there's not been major buying, but no great selling either. So that's really the trend on this. But I think the larger focus still continues on large private banks, a little bit of SBI that's being bought in the PSU space, and some of the mid-tier banks, which look attractive, and NBFCs. I think that's where a lot of focus is going, because there's so much money coming in. There's not much selling that's happening. There's more adding positions, to the existing counters, and selectively in certain IPOs looking at investments.
But Kaustubh, according to you, in the last 1 month or so, is there any sectoral or stock trend which is really propped up and has really, been intriguing?
Intriguing is, where we've seen certain cutting of positions. I think we spoke about microfinance. I think people have kind of taken, money off the table. So Bharat Financial is, one space that's been done. Some of those smaller PSU banks where we've seen money being taken off. But I think the other trend, which again is emerging, is mid caps, which have run up quite significantly, especially after November's demonetization amount, where a lot of them corrected. They've significantly then appreciated post that, and a lot of profit booking has happened on counters, such as Crompton Gibbs, Electrical, KEC, and a few other counters where they've seen some sharp up moves, and managers probably just a little wary about where the valuations are, and they want to take some money off the table there.
What is happening with small cap funds? Are they churning their portfolio? Are they getting into are they moving up the value chain, or are they still sticking to the same portfolio but not buying anything fresh? Because small cap is where all the action is. Bulk of the outperformance has come into the small cap space. Fund managers are openly telling the distributors and the clients that we don't want to advertise a small cap platform. These are not the stocks or not the schemes which you should be buying.
So small caps is an interesting space, and actually if you look at it over the last, and the run we've had since March, where FI has also participated in a big way, large caps have actually marginally done better than the mid and small caps. So that's probably a good trend, and money has been coming into largely large caps, and like I said, because there have been some restrictions on where investors, how much they can put into small caps, that has ebbed the flow, to a certain extent in that, which is good. So, but I think small caps, they are, because of the valuations, are probably being much more selective and don't mind sitting on a little higher cash than what they would have traditionally been sitting on, so that they can, get the right opportunities before they can invest. But yeah, that's certainly a trend that, that's happening because of the valuations.
Okay, Kaustubh, great speaking with you.
Thank you so much.
Thanks so much for joining in.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.